What's up, YouTube? I'm William Bitter, and this is my channel, Money Thoughts. Money Thoughts. My channel's about saving and investing, kind of anti-materialism, kind of pro-experience, and living out your dreams and doing what you're passionate about. So today we're going to talk about my entire investment portfolio. I'm going to give you a rundown of everything, every stock I own, the percentage of my portfolio it makes up, how many shares I own, and how much each position is worth in my portfolio. Yeah, so I'm in Provincetown visiting a family for kind of Father's Day, and it's my dad's birthday as well. I'm kind of living the retired life right now. All right, so it should be no surprise that Tesla is my number one position in my stock portfolio. Makes up about 38% of my portfolio, the 369 shares with a value of $230,000. I also own my next. Okay. So Tesla is. For Tesla, I have the most conviction and understanding around Tesla. Out of all the stocks that I own, Tesla, I have the most conviction and understanding. They have an unassailable lead in manufacturing efficiency and autonomous driving software. I think they will take a large share of the autonomous EV market, which is ready for rapid growth. Future software margins are definitely unappreciated. Still, I feel like this company is misunderstood by many, which to me, this means great opportunity. Positioning themselves, they're definitely positioning themselves to be a winner in solar energy, and energy storage, which they will win with their lead in battery technology, including their software around energy usage. Elon has mentioned neural network training as a service, which could be its own business with a huge potential upside within itself. And I'm still not even mentioning a ton of other opportunities Tesla will have being in the position that they're in, like Tesla Insurance, Tesla Vision, like renting out their software to other car companies, like an in-car app store. That's something like no one really thought that Apple was going to make tons of money with their app store when it first came out. It's like, oh great, I can send emails with an iPhone. That's kind of cool, but little behold, when new products are created, it creates new ecosystems and new revenue opportunities. Tesla also has like the largest, like high quality labeled real world data, and I think they'll be able to use that to that's a valuable asset. I could see them using that to help other companies train their neural networks, et cetera, et cetera. So yeah, I believe there's a good chance that Tesla will surpass Apple as the most valuable public company in the world by the end of this decade. Oh yeah, quick disclaimer, I'm not a financial advisor or a professional in any sense. I'm just a guy on YouTube sharing my own holdings and my own thoughts with you guys. But obviously do your own research, take everything I say with a grain of salt. There could be inaccuracies, and I'm not perfect, I'm just human. So yeah, do your own research, but enjoy, I hope you enjoy my opinion, insight. Okay, so anyway, I could talk about Tesla forever, but that could be a whole 100-hour conversation. But we'll move on. So, my next largest holding is ARK, which is ARKK, which is ARK's flagship innovation ETF. I did my master's in economics, and I really love the way that Cathie Wood looks at the overall economies and global trends, and then she finds like the companies that are best situated and executing in the spaces that are kind of ready for prime time, as Cathie Wood always says. They're in the right space at the right time with good leadership and good execution. I just love the way she tackles that problem of like what to invest in. And I really trust Kathy to seek out opportunities where I don't have the time or expertise. And this to me is diversifying into her growth strategies. You know, I used to be a little more conservative of an investor, and I had a lot of money in the S&P 500 not too long ago. I mean, within a year, I moved all my S&P 500 holdings into the ARK and the ARKK and ARKG ETFs. So as you can see, 13%. See at Tesla, I have 369 shares, $230,000. ARK, I have 13% of my portfolio, 656 shares at almost $80,000. And then the ARKG fund, which is ARK's genomics ETF, is also about 13% of my portfolio and almost $80,000 worth. I'm super excited about the convergence of like genome sequencing getting cheaper and cheaper, and then AI is getting better and better and cheaper, and also like gene editing. I think that on top of gene editing, I think the convergence of these three technologies will open up like a world, like a sci-fi world, like a movie of medical advancement. And while I don't know enough about the space to make like really informed investments in the area, I definitely want exposure to this market segment. And so that's why I specifically chose ARK's genomics fund to invest in, besides just their flagship fund. Okay, so that's between those three, that's more than half my portfolio right there. Amazon is something I've had forever. It's almost 10% of my portfolio, 17 shares, about $60,000. I just think that they're going to remain a leader in online retail and cloud computing. They do like cloud computing and machine learning as a service for businesses, and I think it's Amazon Web Services. And dude, I mean, like, they're just going to continue to grow in these areas and just rule. Amazon's always been a great company, and yeah, like, they've always been one of my favorite companies to invest in. I mean, they've already shown what they can do, and I think they're going to continue to execute. Anything to do with like cloud computing and AI, I just think all those companies are going to do well, to be honest. I mean, this is where everything is going, into software, cloud computing, AI. So yeah, and Amazon's a behemoth, and they're definitely going to rule. Okay, so next holding, number 5, is Shopify. It's about 8% of my portfolio. I have 33 shares, about $50,000. Shopify was a pandemic play for me. It was kind of speculative. So for me, Shopify is kind of an Amazon underdog, basically empowering the individual online retailer to do their own online experience. This allows the online equivalent of a boutique store to be able to compete with like a Walmart equivalent of online retail, which is Amazon. So I think this really empowers individual online retailers. If I'm trying to open up a store, I'm not going to start an Amazon, and I'm not going to start a brick and mortar store. I'm probably going to go to Shopify and open up an online store. So it's just that easy. I mean, I'm not saying it's easy to be successful, but that's, if someone's opening a store, it's probably an online store through Shopify. So I think it was a pandemic play, but I think Shopify is going to continue to, I don't know, maybe it'll be the next Amazon. We'll see. But I'm definitely excited about Shopify. And they've like 4x'd for me. This 8% allocation wasn't how it started. I definitely didn't put that much money into Shopify. It just grew into a large position. All right, so number 6 on the list is Bitcoin. It's just over 5% right now. Today, is Sunday, June 22nd, 2021, and there's just kind of like a big dip in crypto. So current price of Bitcoin, I think, is like hovering around $32,000. So there is no denying that cryptography will someday be ingrained in everything we do. I don't think anyone's denying that everything is moving into crypto. To me, in my opinion, this is happening. This is fact. It's hard to say though which crypto investments will be huge winners. But I'd say that crypto is still in its infancy stage, and there's still huge upside. And I think there's room for many winners in the crypto space. And I think Bitcoin, it's the most widely adopted store of value in crypto right now, and I think it's gonna do well. I think it's kind of a safe bet, but I think there's definitely room for lots of winners, and I'm totally open to being wrong. But I put enough in Bitcoin. I bought one Bitcoin, and I'm just gonna see where it takes me. But I still think that cryptocurrency is still so far in its infancy stage that anyone investing in crypto and doesn't think they're speculating to some extent, I think they're a little crazy. I mean, I think it's a good investment. I really do. But people that are going all in on crypto, I think that's kind of wild. I think all in on Tesla is a safe bet, though. Anyway, we might all disagree about all these things. Okay, so number 7 on the list is Apple. Apple is about 5% of my portfolio as well. 240 shares, about $32,000 worth of Apple. Apple to me is like a savings account. I believe they're going to maintain their lead in hardware, computers, smart devices like watches, phones, tablets, etc. And so, I feel like their pace of innovation has slowed, but I still think they are like the largest publicly traded company, and I think they're gonna like continue to reign the computer space. And what I'm really hoping for is for them to make a big move into VR. I think could be a huge potential upside for them. And I could see them creating like the gateway to like new worlds, new virtual reality worlds. I know there's a lot of other people that are doing it. I just feel like everything that Apple's created as a gateway into computers, I just think has been so premium to everything else. So I'm really hoping they come out with something amazing. I could see, spending a couple $1,000s on a VR Apple headset and it being like incredible. Okay, so that's Apple. I think, they're a safe bet. Okay, let's go to the next one. So Google, it's just under, about 3% of my portfolio, 7 shares, about $18,000 worth of it. It's a long held position by me. So is Apple. I've had Apple forever, Google. So, I just think that Google, like Amazon, like they're just in the right space. They've got a huge amount of data and algorithms analyzing this data. It's like this feedback loop of like people using Google, people on YouTube, just tons of data coming in, analyzing this data to like get people to keep coming, like analyzing this data to like maximize, people watching YouTube, people using Google, and just feeding it, and then just getting more users, and more users create more data, which helps Google get better at maintaining or getting their users, which helps Google get more data, and on and on and on. And I just think it's one of those loops that you just once it gets going, I don't know if we'll ever be able to break free of Google. Google has their hands around our neck, and we're okay with it. And I think that's great. I think Google's great. So yeah, I think they're gonna own for years to come. I don't think their Waymo is competition for Tesla. I think, you could say Waymo has autonomous vehicles on the roads already, like maybe like 6,000 of them or something like that. I can't remember. But I just think that their strategy, how they're going about it, is not scalable. Tesla's strategy is scalable. when Tesla launches, autonomous vehicles, it's going to be profitable. It's going to be scalable. They're every car that they're making. Okay, I could talk about the autonomous thing for a long time. Let's move on from Google. Number 9 is Zoom. So Zoom is just over 1% of my portfolio. 23 shares, about $8,000 in Zoom. It was a pandemic play. This is pretty speculative, but during the lockdown, everyone was using Zoom, and I just figured, they must be doing something right. And I don't know, I'm kind of surprised people didn't use like Google or FaceTime, but I was like, wow, Zoom's doing something right, and I invested, and I think, they must have learned a lot from their users, and I think they're going to continue, everything is going virtual. So I guess my computer's battery was dying. Anyway, I don't want to go back inside because there's nice lighting out here, so I just plugged in my computer. I think the pandemic accelerated things going virtual and remote, but I think it's, maybe that trend won't continue at the same rate, but I think the trend will continue, and I think Zoom will benefit. And so I'm still holding on to Zoom. The one thing I'd be concerned about is like competitors like Apple and Google. But I guess I can't be too worried because I'm also kind of hedged and invested in their competitors. So, all right, so number 10 is Fiverr. It's about 1% of my portfolio. I have 19 shares, almost $5,000. This is another kind of speculative pandemic play. The same kind of thing as Zoom. As things go more and more virtual, the online job market, remote work, I think that, as more and more people are making money through online gigs, and while I think the pandemic accelerated this trend, I think it will continue to stay this way for quite some time. And I just think that Fiverr is in a place to continue to kill it. I use Fiverr to make my logo for Bitter Dog Walkers, so that's how I kind of knew about Fiverr. So I think I'm holding on to Fiverr. Okay, so next on the list is Palantir, number 11. Just about a little over 0.5% of my portfolio, $4,000 worth. It took me a long time so it actually took me a really long time to understand Palantir, what they do. I just kept looking into it. I was like, I was like, okay, so data analytics, I don't understand. But I finally kind of understood. I finally kind of grasped it, and I was like, whoa, everything is going in this direction, data analytics and AI solutions. So I got really excited about Palantir once I kind of finally understood what it was. And I know they offer these solutions for businesses and individuals. This is just an amazing industry to be in right now. And Cathie Wood believes that they're executing really well, and if Cathie Wood puts her stamp of approval, I hate to say it, but I really agree with how she thinks. I actually got put onto her because I invested in Tesla, and she was such a large proponent to Tesla that I found out about Cathie Wood through Tesla. So I invested in Tesla before I knew who she was, and I was like, yes, I totally agree, so she put her stamp of approval on Palantir. I still wish there was some way to experience their product more tangibly, but I just feel like Palantir seems like it could have just as much upside as Tesla, but I just don't have the same conviction and understanding as I do with Tesla. I don't really understand Palantir's leadership. I just don't know enough to go all in on Palantir. So it's sitting there at just 0.5% of my portfolio, but it's something I would love to learn more about. And if there's news on Palantir, I'm probably going to be reading it if I have time. So definitely look into Palantir. So that's number 11. Number 12 in my portfolio is Spotify, also about 0.5%. 15 shares, about $4,000. This is basically me supporting my favorite streaming app. I just like it better than all the others. And I kind of like betting on the underdog, kind of like Shopify. I mean, they're definitely doing something better than the rest. I guess I haven't used Apple Music in so long that maybe I just don't know. But when I was introduced to Spotify, I was like, this is better than any music streaming service I've ever used, and I've been stuck on Spotify ever since. And yeah, like I guess the one thing about Spotify is like there could be heavy competition from like Apple, and you know, but I'm kind of hedged. I'm kind of hedged in a way that I own its competitors, so you know, and honestly, I hope Spotify wins because they're just great. They're just great product, to be honest. So that's my story around Spotify. So Airbnb is kind of similar to Spotify. You know, I have an Airbnb in Colorado, and you know, Airbnb has just become like synonymous with like, oh, I'm going on vacation or I'm traveling somewhere. Like, you know, where's your Airbnb? Or like, did you get what kind of, you know, like, it's synonymous with like place that you're staying or not. I don't want to say hotel because it's almost better than a hotel. Yeah, I mean, I just see less and less people owning real estate, more and more people renting, more and more people traveling, and kind of less frictions of, you know, I think more and more people are going to be moving all around. Like, why stay in one place when you can like Airbnb a place here for 3 months and then there for 3 months and then there for 3 months? Like, that just sounds way more interesting to me than owning one house for 30 years. I mean, I have a house, but it's an investment. It's actually an Airbnb. So I'm not planning on living there for 30 years, you know? So I think, anyway, so just my worldview of like where people are heading, experiences, travel, Airbnb, I think is going to be there to capture that. And they already have captured it. And I think they're going to continue to capture it. And I think, you know, just, yeah, they're just going to dominate the real estate rental market. Okay, so that's Airbnb. So Coinbase. So if you believe that crypto is the future, which I totally do, it just makes common sense to me. Not everyone agrees. So then, you know, I just think you have to own some Coinbase. Yeah, so I just bought Coinbase to be like a part of the action. You know, I don't know which cryptocurrencies are going to win, but I just think that Coinbase is going to be profitable because people are going to continue to have digital wallet. You know, everything is going, like, I think digital wallets are replacing the banks. I think everything is going crypto, and I think Coinbase is going to be well positioned to take advantage of that. Part of me is a little worried about the competition, you know, with Coinbase, but that's why I also own, as you can see, I own a little PayPal and Square as my, just a little, just like $1,807 of PayPal and Square. But I think Coinbase, you know, they've solidified, at least from a marketing standpoint, they've solidified themselves as like the crypto wallet to buy and send crypto. So I don't know. I don't know what's better, what's going to win out, but I think Coinbase is definitely a safe bet, and I think they're going to continue to benefit from the adoption of crypto. So ADA is my next. It's number 15 on my list. Don't have that much. It's 0.2% of my portfolio. I have 1,000 ADA. Like I said, there was just recently kind of like a crypto correction. Just about $1,000 of ADA. I think if you listen to the founder of ADA, Charles Hoskinson, you'll want to be a part of what he's doing with this cryptocurrency. I mean, he helped create Ethereum, and he's heavily involved in and dedicated in making ADA like the best crypto. And I really hope he succeeds. And you know, I think it could possibly be like the next Ethereum, Ether. Sorry. Anyway, so all right, moving on. So CRISPR. This is just a gene editing speculative play for me. I don't know that much about gene editing or where CRISPR lies in this area, but I just bought a little some because, Cathie Wood was touting about it, and I was like, wow, like that's awesome. It was kind of like I didn't know which stock to buy in the genomic space, so I bought that one a little bit, and then I just ended up going in on the ARKG ETF. So same with Teladoc. I actually did set up a Teladoc appointment just because I was curious, and it was one of ARK's top holdings, and it was super seamless. I think like it took me like 10 minutes to like sign up, and within 10 minutes I was like face to face with a doctor through like kind of like a Zoom call, and that was pretty incredible. Not having to like make an appointment weeks out and like leave your apartment. So I was like, yeah, like I'm gonna invest in Teladoc, and so PayPal and Square, number 18 and 19, like I said, just investing in digital wallets. I think that digital wallets are going to replace banks, and I also just made sense. These are some of the leaders in digital wallets and that I'm familiar with, and so PayPal and Square. And so a long time. I've owned SPYG for a long time. It's just I wanted to diversify into some growth stocks a long time ago, and I just never sold it because why would I? And then Doge, number 21 is Doge. That's my smallest holding, I guess. And I have 0.03% of my portfolio is Doge. I have 1,000 Doge, which I guess is only worth $191 now. It's gone down like I feel like it's fallen like 66% off its high, if not more. I just think, everything Elon touches seems to turn to gold. I just bought like $25 worth of Doge, and it like quadrupled in like a month, and I was like, maybe like I'll put in a little bit more. And so now I have 1,000 Doge. I don't plan on buying any more, but there, just in case Elon brings Doge to the moon and makes it the people's currency. Like Elon's the best marketer, and cryptocurrency is one of those weird things where it's like, how much is it the value of what the crypto is offering, and how much of a crypto's success is just marketing and just a community around it. And it's a lot more fun to run around and be like, Doge, dude, Doge, how much Doge do you own? That's like self-marketing, where it's like ADA. It's like you don't really hear anyone being like, hey, have you heard of ADA, this really smart guy online? And he's like creating use cases for it. So anyway, I invested in Doge just in case. Who knows? Maybe that'll be my largest holding because it goes to the moon. We'll see. Anyway, so those are all my holdings. My total portfolio value right now is $610,000. I do have some margin, but I'm going to get into all like my debts and equities and assets and liabilities when I do another video on my like net worth, because this is just to show you like, I talk a lot of smack about Tesla, so I just want to like kind of for the record be like, look, this is a large part of my portfolio. I really believe that these things are happening. And just for all the things that I'm invested in, like I just think it's good to kind of make a video, put it all out there. I definitely don't think I'm like a genius. I just there's certain things that I'm interested in and I learn about them. And Tesla is one of my highest conviction stocks, and that's why it's, highly, why I've allocated so much resources to it. And Cathie Wood is one of like my favorite investors, and that's why I've let her manage a large, almost a third of my money. And the rest I feel like are relatively safe blue chip stocks. Besides Bitcoin, but I still think even in the crypto world, Bitcoin's a pretty safe investment. I know it just dropped like over 50%, but in crypto, if you've learned anything from crypto, it's that it can crash 90% and still end up having like greater gains than any other asset class in the long, eventually. So it's just a very volatile asset, but it seems to be, I'm very bullish on crypto. So I'm not too worried that Bitcoin crashed 50%. But and also growth stocks just took like a 35% pullback, which I just think is just a shift in people's sentiment. Inflation I don't think should have that large of an effect on growth stocks, which is what a lot of people, it's like, oh, inflation, fears of inflation, but I actually think that these growth stocks are going to do well even in a high inflation environment. Anyway, so those are all my opinions, and, stay tuned and, make sure to save and invest your money. Do all your own research before you invest in anything. Do your own, I'm just a guy on the internet telling you about what I'm doing with my money, and I hope everyone's success and happy saving and investing. All right. Peace out, guys.
Save and invest your money.